Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 4:02 p.m. That is Central Time. Today is August 26th. I thought I'd kick off with the Indian rupee. It's weaker, and it does look like it's more likely than not to break lower, which would extend this uptrend for the dollar. But I think it's particularly interesting that it was weaker today against a background where the dollar was also weaker. So today we had a weak dollar, and then we had a bit of bobbing around in the stock market. And by the time we got to the close, the majority of indices were in positive territory. Gold was in positive territory. Oil prices are bobbing around as well. We've had a couple of firm days. Today was a weaker day. Then we're in an environment where there's still a lot of questioning around tariffs, around the interference in the Federal Reserve by the Trump administration. What does all that mean for earnings? And then, of course, tomorrow after the close, we're going to have Nvidia's earnings. And I think that is going to be a rather interesting event. The share was in positive territory in here today. It's not quite at a new all-time high just yet. Something to pay attention to is that its customers are heavily skewed towards the mega caps. So Microsoft, Meta, Amazon, Alphabet are four of the five largest customers, and then Supermicro Computer is the third largest in its own right. But when you start adding them all together, you're getting up towards about 40% of all of the revenue that the company actually earns. So when we think about what the earnings are likely to be for Nvidia, it's likely to be viewed as a bellwether for the entire AI manic trend. But we've not really seen any pullback in the commitments by these companies to continue to plow money into infrastructure development. And I think that's one of the more major themes. There's, I think, then also a rather important question for investors whether one should chase the central theme in a bull market or begin to look further afield for those sectors that might play catch up or those that are completely independent of the manic trend that are beginning their own trends. And of course, it all comes down to relative risk. So there's certainly some questions to answer here.